Welcome to the video. We're going to talk about rental income today, but before we get into that, we'd like to ask everybody who finds these videos at all helpful to please consider liking and subscribing on our YouTube channel, following us on social media. Share this content, please, if you find it at all helpful, because that allows us to communicate what, again, we hope is good and helpful information to even more people. So thank you for your support, and please consider liking, sharing, subscribing, and giving us feedback on what you might like to see in the future. Today we're going to talk about rental income for just a few minutes. The reason we're going to talk about it, you've probably seen it in the news, the CDC has extended the moratorium on evictions related to certain COVID-19 conditions, circumstances. We're not going to get into the specifics of when, to whom, and where that moratorium applies. It is very technical. It is fact-based. It is not directly related to what we're going to talk about today, although obviously the two are related, because as people might qualify for that eviction moratorium, and we're also not going to get into the legality or lack thereof of the CDC issuing this guidance. There's a lot of people talking about that. I've got my own opinions about it, as I'm sure people watching this video do. But again, that's not what we're going to be talking about. We're going to be talking about some accounting and tax matters related to that. But as we're talking about people who may not be paying rent because they are unable or unwilling, and maybe they can't be evicted if they do apply for the moratorium that we're talking about, or other circumstances, the way that is accounted for, and when and if you have taxable income consequences, can be important for landlords. So we're talking directly to landlords, owners of property who are renting to other people or businesses who may need a little help in determining what their taxable income or their taxable consequences may be in circumstances where possibly they are not receiving rent that they otherwise would or should be receiving. So again, we're not going to talk about the moratorium and its legality and its applicability. We're talking about the tax consequences of not receiving rent, basically. So I'm going to take a quick look at my notes here. So we're talking about rental income recognition and the timing thereof. And just like most things, or really all things in the tax law, this is going to be divided into a couple of buckets based on what sort of method of accounting for recognition of revenue and expenses you're following, either cash basis or accrual basis. We're not going to go too deeply into either one, but suffice to say, a cash basis taxpayer, which is going to be the vast majority of individuals and an awful lot of small businesses. I won't say most, but an awful lot of small businesses, they're going to be on the cash basis method. This is pretty simple. If you receive rent, you receive cash, you receive payment, or something that is as good as cash, a check that you've not yet deposited, that you haven't deposited yet, that's income. It's income at that time. So if at the end of the year you've received a certain amount of cash and you've got some checks you haven't gone to the bank and deposited yet, that's income. You have to recognize that for tax purposes. It's pretty simple for a cash basis taxpayer. So if you've received it, it's income. If you haven't received it, it's not. That, by and large, is the way it's going to work for a cash basis taxpayer who is receiving, or in this case, potentially not receiving, rental income. For an accrual basis taxpayer, it can be a lot more complicated. Now, accrual basis taxpayers tend to be larger businesses, don't always have to be, but they do tend to be larger businesses. So again, we may be talking to people who are renting significant numbers of property, larger properties, receiving maybe more in rental income, but that's not always the case. Now, an accrual basis taxpayer, we could go in depth in how accrual basis accounting works for both book purposes and tax purposes. That is a whole other series of conversations, but to suffice to say, the receipt of the rent, in this case, doesn't necessarily count as the only thing that matters in terms of triggering income. If you have met what's called the all events test, then you've got income. And that basically means that, and I'm somewhat oversimplifying and summarizing here, you have basically performed the service. Everything that's happened, everything that needs to happen to give you a right to the income has happened, and you know what the amount is. At that point, you basically do have income most of the time. So if you've got someone, if you're an accrual basis taxpayer, you've got a rental agreement with someone that says they owe you, say, $500 rent a month for the full year, starting in January, you get to the end of your year. Let's say your year does end, is on a calendar year, so it ends at December 31. The end of the year, let's say they owe you $6,000. You have provided all of the service, the property, etc., that you said you were going to provide, but they don't pay. You've still got $6,000 worth of income for tax purposes at that point. What do you not have? You don't have $6,000 of cash if you've got somebody who's not paying. It's that simple, but you do have income. So there's a lot of nuance and fact-based consideration to be made around this, but that's essentially how accrual basis accounting works. If you have a rental agreement with somebody, are there exceptions? Yes. Are there complications for certain larger rental agreements? Absolutely. But by and large, that's how it's going to work for an accrual basis taxpayer. Now, if you do have someone, let's use that $6,000 for example, who hasn't paid, isn't going to pay, and let's say that the preponderance of the evidence, the facts basically tell you that's not going to be collected. It is uncollectible. Then you can take what's called a bad debt deduction, which basically removes that from income. Maybe it is or maybe it isn't in the same year that you had to recognize the income, but that's the remedy if you have recognized income on something you're not going to collect. Now, the determination of whether it's uncollectible is a whole other conversation. It is fact-based, it is complex, it is based on things like the condition of the tenant, the collection efforts of the landlord, and other related factors. But just know that that does exist to potentially close the loop if you have recognized or basically are being forced to recognize income on something you haven't received. Again, in this case, rent. So all that to say, the considerations around the recognition of rental income can be complicated, potentially more so for an accrual basis taxpayer than a cash basis taxpayer. And we're not getting into a lot of other considerations for rental income here, such as the occasional rental of personal property, vacation homes, etc., rental loss limitations. There are a number of considerations to be taken into account with rental properties and taxpayers of different stripes, whether you're a real estate professional or not. This is an entire area of study in and of itself, with a lot of arms and legs to it, to use a fairly non-technical term. But just know that the point here is the recognition of rental income isn't necessarily always attached to the actual receipt of the cash. If you are a cash basis taxpayer, it is. If you're an accrual basis taxpayer, it may not be. And this, unfortunately, for a number of reasons, some of them related to people who are potentially unable to pay rent, but also attached to maybe people who may be unwilling to pay and know that, or at least believe that, they can't be evicted. This is unfortunately something that is a consideration for a number of landlords right now, and it's something we wanted to very briefly speak to. Obviously, there's nothing here that is conclusive or gives anybody any real workable advice, but it's just an indicator. And as we always say, please talk to your advisor. If you don't have an advisor, we would love to talk to you. But in terms of the applicability of the moratorium, legal or otherwise, that's something with which you need to talk, or on which you need to talk with an attorney and or another competent advisor, and we would encourage everybody to do that. Again, we hope you have found this useful. We solicit your likes, shares, and feedback on future content. Thanks a lot. Have a great day.